good day all. Ira Epstein of Linn and Associates, and we're on your metals update, your weekend edition version. And this is for Friday, the end of a quarter, the end of a month. Who knows what it's the end of, but it is June 28th, 2019 at 3:15 p.m. Central Daylight Time. This will be how the stock indices are going to finish up at this time. At 3:15 they'll stop trading, and we'll pause then until 3:30 and then go to 4. So you're right about it, this area. A rally into the all-important tomorrow, that Saturday, when we hear how the Presidents Trump and Xi got along. Are they sending their negotiators back to the table, or are they going to play hardball with each other and nothing happens? The energy market down pretty hard today. I think the market's looking at number one, the U.S. setting records in its production. Number two, there's fear. You know, if you don't do anything good in between China and the U.S., that's going to weigh on the energy demand. So market a little concerned. As for the gold market, it's held the gains that it's put up. You know, this is a market finishing off the week in the 1420 area. That's pretty good action. The copper market's stable here. It doesn't know what to do based on is China and the U.S., can they get anywhere on their talks? That's going to be the big issue. So when we look at a monthly chart of gold, once before we tried breaking out on this monthly basis, and the market got immediately thrown back. You've got a different situation right now. There's an awful lot of fear. So you've had a breakout to the upside on the monthly chart. You'd have to get back under 1266 to negate that. You're sitting here now up for the month, $107. That's a big gain, but it's got a base under it now, and if the market wants to run with that news, it could get interesting. So you have to ask yourself a question. Negative U.S.-Chinese trade, is that bullish or bearish? Positive that they go to the table, is that bull or bearish? Okay, that's what you got to ask yourself. Now, when we take a look at the weekly chart, how could you not see this market has run to the upside, certainly with the idea that the fear that the U.S. and China will go into this next round of throwing more tariffs on each other. Well, that's not good for the world economies, and gold has gotten a bid off of that. Not inflationary yet. This is more of a fear bid. It's a big one because you can see how the market's rallied, and it's held this pattern of higher lows, higher highs. Frankly, when the market got right over this 1304.20 area, that turned the trend up, and it hasn't looked back since that moment. It's been rather dramatic. You've had a bullish crossover take place back here where the 18-day average in red got over the 100-day, and both these averages are over the 200. So the market's got a long-term bullish setup. You've stayed far away from the upper Bollinger Band. Now, be it a weekly chart or a daily chart, only 5% of the time do you stay outside of the Bollinger Band, to the upside or downside. So this market's a little rich in price is one way to look at it. I would be surprised if soon you don't start coming to the right-hand side of the bands. You've got 1 week over it. Last week you were over it. This week, let's just see, you were not over it. You closed under the Bollinger Band right here, 1340.10 versus 40.60. You have 2 weeks in a row over it. You can go more than that. I've seen it go to the 5. I've seen it go more, but it's rare. I mean, real rare. So nice action, but at some point here, look for a pullback in the market. In terms of momentum and bias, the momentum is pointing up. The bias is up because you're over the 18-week average. You're up sharply, I think ahead of yourself a bit, but I'm not bearish. So don't take that to mean that I'm bearish. In the GLD ETF, momentum up, bias up since you're over that 18-week average, trend up, higher lows, higher highs all the way through here. Like the futures, a bit ahead of itself, but still a very bullish chart. And the same with GDX. So all parts on the weekly basis are strong. You can see how the market is held up nicely with higher lows, higher highs. You can see the battleground right here. You tested the 18 and the 100-day average. Then you started climbing over them. You stalled out against the upper Bollinger Band. Then you added the momentum last week, and you followed through with even more momentum this week. 2 weeks in a row over that number. The gold-silver ratio, hate to say it, but it still stinks. In other words, you need more and more ounces of silver to get 1 ounce of gold. That is not a great sign for what we call the industrial metals. As you can see in silver, it doesn't look anything like the gold chart. Really caught between the lower Bollinger Band and the upper one. Should you try the upside again, you've got resistance, let's call it the 1555 level, all the way up to the 1582.5 level, the 100-week average. So layers of resistance with support back at the 18-week average at 1497.5. In the copper, you've negated the downtrend. Why do I say that? Because up to this week, you still had the pattern of lower highs, lower lows. Last week, you had this pattern where you had that outside week and you're following through with it. Now, should the market decide to run, you could get maybe back to that 100-week average, the 18-week here of 280, and if you really had a great Chinese-US deal, maybe 292. Don't have those deals. The question is, what's the market going to do? Because it has support where it broke before, 258.40. In the platinum market, another market that said can't be short this anymore. It got up and over this week, this 833.30, so that negates the downtrend. You no longer have the patterns of lower highs, lower lows. I don't see an uptrend. I see a market that has neutralized itself, trying to turn momentum up. First resistance, 18-week average. Second, the 100 at the 882 level. And if the market breaks through this low that we made here, and that low last week was 790.20, then you're putting into play the lows of 773. The palladium market is making a run for its all-time highs. You can see the all-time high was here. You broke back. Battleground became the zone of the 18-week average, and now the market's again doing its assault to the upside, momentum up, bias up. I'm not going to call the trend up on the swing line. You got a lower and low, higher high. So it's one of these stilt patterns that I would expect stiff resistance to come in if we can get there into the 1581 level. Last, the dollar index, which is in a downtrend underneath the lower Bollinger Band. Now, a lot's going to depend on the G20 summit that's going on right now. If the market wants to accelerate down, the 100-week average could be the next support zone. If it gets a bid into it, it probably gets back over and stays over the lower Bollinger Band. It's over it right now at 95.73.5, so you're getting over it. And the 18-week average becomes the resistance point. But anyway I look at it, nothing bullish on the dollar index. You know, I talk this way, but on a lot more detail in my morning subscriber video. Now, it's a subscriber video. It's not free. What I'm able to do in that video, and I start recording it typically before 6 a.m., is I'm able to review 40 futures charts, and I do 5 ETFs typically. I do them in a certain sequence so that you get used to the sequence, number one, and you can move around it easy. I'm assuming you're up early in the morning, you got your coffee, you're looking at the markets, and I'm going to cover everything in this detail. Now, on the bottom, there's a pull area on the video. So when you pull it, you can move from area to area. You can click over one. You've got it. There'll also be a lexicon on the side, so you can click that and go to the section you want. You may not be interested in everything there, but there's other parts you want. Now, let me tell you what the big difference is. I'm able to say, buy here, sell there, do this. I can't do that in the videos you're watching here on YouTube. I'm able to throw a lot more. Sometimes I'll do pivot point analysis. I'll talk to you first thing in the morning about the fundamentals that have happened in Asia and Europe, where we're at, what reports we're looking for. I'm going to be able to tell you if there's something crazy going on. You know, Sunday night, you're going to be the first reaction after the close today to whatever's going to happen at the G20 summit between Presidents Trump and Xi. We'll see what that is all going to do. So I'm going to be all over that. And think of it this way. Something special happens. I also put out from time to time special videos for the subscribers. It's not expensive. It's intentionally very inexpensive. 26.5 cents a day if you want to try it out. Your commitment's for 30 days, $7.95. After that, you don't have to stay with it. After that, you can go month to month for $15, or a lot of people buy a one-year subscription for $156, which equates to about $13 a month. This is all described on our website at www.untitled www.iraepstein.com under either research or education. You'll be able to click right up here, by the way, if you're watching me on YouTube. It'll take you to that area. In any case, I'm Ira Epstein. Buckle in. It's going to be a wild Sunday night, no matter what happens. You have a good evening.